today's swing trading session and chart analysis. Great. So Nifty has shown a little bit of recovery over the past 2 days. So it's a little bit heartening, but still we are not out of the woods as yet. But let's see, what prospects we have, if there are any, for swing trading and picking some stocks today. So first off, disclaimer, I'm not a SEBI registered analyst. So discussions that we do here are not trading or investing recommendations. What we are doing here is purely intended for educational purpose. Yes. मार्केट अभी भी डूम एंड ग्लूम है, अभी तक हम बाहर नहीं आए हैं. So this is the Nifty on the weekly chart on the Bollinger. As you can see, it's gone down below the Bollinger in the previous week, closed below, and then a good green candle over here, which could signal a reversal. But we have to wait for one more green candle which crosses the high at this point. And then we are able to confirm and say that probably there will be a move up to 17,000. Till that time we are not able to say for sure whether the market will move up or not. As of now, it seems to be what they call as a dead cat bounce. It's a dead cat bounce. So it has gone down very deeply, and so now there has to be some kind of a relief. So they call that as a dead cat bounce, and it will be a little bit of bounce and then resume the the downward direction once again. That may happen, but we have to wait and watch. This green candle shows that there could be a reversal, a slight reversal up to if it continues to the next week after the expiry on Thursday. If it continues to the next week, then probably we may see a move up to 16,800, 16,900 levels, right? And then the downward trend could resume again. So we are not out of the woods, even though there has been a slight relief. We are not totally out of the woods as yet. Let's look at a few indices. Some of the indices are showing really good signs, and those indices may give us opportunities for swing trading. Bank Nifty is again same as the Nifty, even though Bank Nifty is slightly weaker than the Nifty. Nifty is showing more strength, and Bank Nifty is not showing as much strength, right? Okay. Some more indices. Nifty IT. Nifty IT is pretty much hammered down in the last 4 or 5 weeks, and now it might again trying to recover from this end again. Just like all the other indices, still we have to wait and watch if there is a confirmed reversal or not. Nifty Metal again, after a big hammering in the last week, trying and this is an inside candle. This is an inside candle, which means that it is not decisive. It can go either way, right? So this week is forming an inside candle. It can go either way, but that's what we call a dead cat bounce, right? Nifty Auto is showing some kind of promise. Okay, look at Nifty Auto here. It went down the Bollinger Band in the last week of February, then recovered up to 20 SMA. Along with the market sentiment went down, but formed a doji candle in the last week, and now it has formed a green candle. Now, if this moves above the 20 SMA, then there can be some good opportunities happening in the auto sector. Yeah, there can be good some opportunities happening in the auto sector. So you want to look at a few stocks from the auto sector. Let's look at a few stocks from the auto sector if there are any good opportunities here. Maruti, no. Okay. Hero Motocorp, Hero Motocorp can provide an opportunity here because it has crossed the 20 SMA and above the 20 SMA, can take 20 SMA as a stop loss and aim for the upper Bollinger Band or somewhere these levels where the resistance is coming at 2,760 odd. And right now it is at 2,539. So this can provide a good risk reward ratio because it has crossed and closed above the 20 SMA. Hero Motocorp. Okay. And then some other stocks, Mahindra, M&M, no, not a good entry point. Then we'll have, let's say, Balkrishna. Balkrishna Industries is a tire. Again, Balkrishna Industries closing above the 20 SMA. This is a very good risk reward ratio, almost negligible stop loss here. Can put a small stop loss and try for this opportunity here, which can aim for, let's say, around somewhere here in this consolidation area, 2,394. Right, so approximately a more than 200 plus move can be expected here in Balkrishna Industries, right? So that's how you look at the indices and also try to figure out where you can get some stocks which can provide some opportunities for swing trading in the next week or so. Reliance Power, okay. We have to wait and watch. Reliance Power, it is trying to show some reversal here, but again, the next green candle should be if it gives a confirmation candle, then it can move up to the 20 SMA up to 14, right? But nothing spectacular on the volumes front, so be careful. Zomato, really want to buy Zomato? Yeah, so it's holding up, right? It's holding up at this level, but you want to see this candle crossing the high of the previous red candle. So the previous red candle high is at 60 rupees, 60.40, and as of now it is trading very close, 58.75. So it has to close above this, and so you can take a risk over there, possibly, or wait for for a conservative trader, wait for one more confirmation candle to go above that, and then it can then wait for then you can target the 20 SMA at this place. Oberoi and real estate, yeah, we'll look at the Nifty Realty. Same story, reversal happening, but we need a confirmation here. Although there is quite a bit of selling from the top, so I doubt. But let's see, Oberoi. No, it's a red candle. It's not. It actually tried to go up, but there's quite a bit of selling from the top. So ultimately, it is closing in red over here. We want to see DLF. We were actually seeing DLF last week. No, again, quite a bit of selling from the top. This is why we need the confirmation candle, because it shows that reversal, but once it comes to the top, again selling from the top, it means the downward trend is being resumed. So that is why we wait for the confirmation candle to happen, right? For to be a little bit more on the safer side. HDFC. Very indecisive. I would want to wait and watch and to move, for it to move above this. You see the selling in the last week. So this is a good stock in a way, because HDFC is a very good stock, so you can take a risk on this. But still, if you're looking at it from the short term as a swing trader, because this is a swing trading session, so I would want it to cross 2239, the high of the previous week, 2237.85. That would give me a comfort level. Right now, this is not the look of the chart is not very comforting. Even though it is showing a reversal, because they see the selling in the last week, huge selling in the last week, and in the price has been hammered down. and now is trying to recover but not cross the high of last week. So not very comforting. Naika. Okay, on the daily charts, it has been reversed. I'm not seeing the weekly charts because there is less history on this. On this, there's not much data on this. So, looking to the daily charts, it's actually staged a reversal here, right? After going down here, it's actually staged a reversal here. Possibly will come up to this level at 1572, and then find a resistance over there, right? So that is in maybe in a couple of days, as the market supports, should continue this trend up to the 20 SMA. But this is the daily chart. This is not the weekly chart. Infra, would you mind giving me some stock names? Nifty Infra. Not sustaining. I'm just looking at the index here. Yeah. So see, looking at the index here, in the previous week, big red candle, and this time it is forming an inside candle. So this is indecisive. This is a nature of indecisive market. So we have to wait and watch. But it can go upside, it can go downside. As long as it is in the inside, we have to see whether the breakout is happening or the breakdown is happening. So wait and watch on that. L&T or Ultratech. It's not comfortable at all. So there is selling from the top, buying from the bottom. Again, indecisive nature of in both the previous week and this week. So you see, as it goes up, there is selling here from the top. As it goes down, it is buying here from the bottom. So there is, as of now, there is no trading opportunity here, right? It is consolidating, but there is no trading opportunity because it is indecisive. It is just holding that price. L&T. Yeah, wait for the next week. If the green candle comes and tops this, then this can show a reversal. L&T can show a reversal. DLF, we looked at DLF. The reality, it's not promising. It's not promising because there is a high selling from the top. In fact, even in L&T, there is a high selling from the top. Uh, Quite a bit of selling here. But wait for the next candle to appear and cross this high. Then you have a confirmation. PVR. Okay. PVR holding the 20 SMA very good in this kind of a scenario. Holding the 20 SMA is excellent. But as you can see here, since the last 1, 2, 3, and 4 weeks, it's trading in a range, right? So as of now, I cannot see a trading opportunity. With stop loss is deep. Even if you take at this point, and there is a resistance here, and at this level, and the stop loss is kind of you will not get a good risk reward ratio in this scenario. You might not get a good risk reward ratio. If you want to see, there's a resistance here, the top 1841, and even if you take the stop loss here at 1722, around 60 rupees stop loss, and 40, so it's probably a 1:1 risk reward ratio, but not cannot say that it's a great trading opportunity. We cannot say that because you will find resistance over here. It may not probably go up to this level. You may find resistance over here, 1841. If it crosses that, then only, and again the consolidation over here. No, not comfortable. Probably it may go up, but a 1:1 risk reward ratio. So if you ask me, I won't take that trade. If you're comfortable with a 1:1, you can go ahead. Gale. Yes. Yes. So reversing from the 20 SMA, taking support at the 20 SMA, And what is this price? 153, and the 20 SMA is 150. So very low stop loss. Yeah, 3 rupees stop loss, and you get 162. So almost resistance here. And if it has momentum, doesn't seem to have momentum, no volume here, but if it goes up, then it may go up around 9 or 10 rupees. So 3 rupees stop loss, 9-10 rupees. So 1:3 risk reward ratio, quite good. I don't analyze US stocks. There is so much stocks here only to analyze. What to analyze in the US stocks. I mean, you can, if you want the technical analysis, this is the same. If you look at the US index also, or any index, or any stock, or even crypto or whatever, the funda that we are using, the logic that we are using is the same, right? Only thing, in crypto there is huge amount of volatility. In terms of US stocks also, you will see extreme amount of volatility, because like we have in circuit filters here, in the Indian market, we have circuit filters. US does not have any kind of circuit filters, so it can go 20%, 30%, even in one day, or whatever, it can go anywhere. So that kind of volatility is there in the US market, but otherwise the logic is the same. Yeah, how to scan the stocks. So yeah, so we were doing this, the Bollinger Band reversal. So you can use this Bollinger Band reversal scanner on charting.com, Bollinger Band reversal, and I have run it on the Nifty 200, and it is showing TCS. There is a slight negative movement in the price, but we want to look at TCS. Look at this. So reversal from the lower Bollinger Band in the previous week, and crossing the high of the previous week. As of now at 3448, and there's a quite a bit of space here on the upper side up to 3645. So you have the target at 3645, and the stop loss here at 3369. This is what 3645. Yeah, I just typed it out over here. 3645 and 3369. This is TCS. So it gives you a risk reward ratio of 2.45, right? 1:2.45. TCS. So that's how you identify the stocks. And also what we are doing right here, even if it doesn't come up on the screener, you saw me doing this, no? You saw me doing it on the index, checking out all the indices, and we found in Nifty Auto, there were some good opportunities in Nifty Auto. So we checked out that index. I think which one did we check out? Hero Motors and Balkrishna Industries in the Nifty Auto. In fact, even in Nifty Pharma also. So this is also how we. This is another way of identifying the stocks. Even if it doesn't come up on the screener, it's not necessary, because the screener has crossed above the lower Bollinger Band, and it will come up. It will only throw up those kind of stocks. But suppose if it doesn't cross, yeah, it just goes down, and almost just it's near the lower Bollinger Band, and then starts a reversal. It won't show up on the screener. So that's the good thing to do is check out all the indices. What are the indices doing? And if the indices are reversing, chances are you will get some good opportunities in the stocks of those indices, right? So see Nifty Pharma, see this reversal, gone down, and then showing up this reversal. So probably in Nifty Pharma you will get some good stocks here. So I checked out some of the stocks. I checked out Divi's. Divis closing above the 20 SMA, very close to the 20 SMA. So that means almost negligible stop loss, and you have got a consolidation here. So it probably won't move up to the upper Bollinger Band, but you get this resistance over here 4581. So there is a move, a move of 200 plus probably. With an absolutely negligible stop loss just below the 20 SMA, you can put a stop loss and have this trade going. So other stocks in DVs, and which one else? No, Dr. Reddy is weak. And then Cipla, not yet, not above the 20 SMA. Then which one? Loras. See, just above the 20 SMA, this can be a low stop loss and high gain opportunity here. Loras Labs, DV Labs. So what I'm also telling you is, how you look at the indices and then figure out stocks for yourself. You don't need, even if you don't have the help of a screener, you can do that for yourself. Let's look at some other nifty pharma stocks. Loras, Lupin, Sun Pharma. Yes, that's what I was missing. Yeah, you see the green candle here, the green candle here, taking good support at the 20 SMA and also a confirmation candle. So 20 SMA can be a very low stop loss, and again moving up to a consolidation, to this consolidation of 930, 940 levels, right? So you have a 40 rupees, 40, 50 rupees space on the upside, while a almost 10 or 20 rupees stop loss on the downside. So again, a good opportunity, 1:2 opportunity here. So that's how you also scan stocks. Adani is a safe buy. Adani is never safe, but you can use it for trading. It's a very good trading stock. Which one? Adani. Okay, let me know which one. Bridge. Yes. So you can take 20 SMA as a stop loss here. It just moved and closed above the 20 SMA. Take it 20 SMA as your stop loss, which is around 810 or so. The current market price 830. You can aim for this consolidation, this resistance over here, 967, or the upper Bollinger Band is 950. So that is good enough. So 120 rupees on the upside, and just maybe a 20 rupees on the downside. Excellent. Adani Power. Oh, no. There's no good entry point at this time. It's too far away from the averages, right? Not a good entry point. Adani Ports. Adani Ports, if it crosses the 20 SMA, then you can take, there can be an opportunity over here, but it's still below the 20 SMA. So as of now, no. You want to look at some of the FMCG stocks also. FMCG is a defensive sector, and in this kind of volatility, the FMCG can give some good cushion to your portfolio in terms of volatility. So the FMCG is taking the index is taking support at 20 SMA. Quite a bit of revival here from the downward movement, and coming up here and showing strong green candle in this week. So look at some of the FMCG stocks. Not yet out of the woods. Dabur, Hindustan Unilever. This is already moved. Okay, you missed this. This is already moved, and now the stop loss is too deep. Okay, Marico. Again, it's already moved. Looking at some of the Tata stocks today. See this Tata Consumers, just above the 20 SMA. Okay, so this gives you a good entry point here, just above the 20 SMA. Can put a very low stop loss. Is that 754, and the 20 SMA is 751. Hardly 3 rupees, 4 rupees stop loss. And then you get an opportunity up till here 820 levels, right? So that's around 50-70 rupees on the upside, and with a hardly 5 rupees stop loss. Even if you keep it little below the 20 SMA, hardly 5 rupees stop loss. So good opportunity here in the FMCG also, right? Somebody was asking about Tesla. I don't know about Tesla because I haven't done US analysis. Although I can say that if you do this, if you apply this chart on the Tesla, you can analyze it in the same way. But I haven't done it, so I don't know. I don't know if I can get it over here. I don't think so. Oh, okay. Trying to reverse here, but not a green candle. We are looking at Nasdaq, Tesla, and so needs to have a green candle and a confirmation from here. So that will be more, that will give you a comforting factor. But look at the volatility in the last few. This was what I was saying about the US market. Look at the volatility that is happening in the past a few months. Right from a high of 1,243 to a low of 748. The kind of volatility is huge. Good stocks to buy and hold if you have less money. Then right now, we were discussing when we were discussing the interest rate hike in the previous stream that we had on Saturday, that which are the good sectors to invest in right now. See, defensive sectors like FMCG, right, and good dividend yield stocks. These are the sectors that you want, because it will cushion your portfolio in terms of the volatility. So because the FMCG is not so volatile, and dividend yield, because some stocks like REC or PFC and all, if you get them at a low level, you also get a very good dividend yield. So they pay out some very good dividend. So even if the stock does not perform in the medium term, you can get some good dividends on it. That is one way of doing it. Otherwise, if you don't want dividend stocks and all, you just want to go for growth stocks, and this is the best time to allocate money in the bluest of blue chips right now. And don't go for anything outside the Nifty 200. But in the bluest of blue chips, you get some very good stocks at the low levels. But don't go all at once. That's the only thing. So any stock that you take, some good high compounding stocks you want to take. Look at all the blue chip stocks. Look at let's see. I'm looking at Dabur for quite a while now. This is the monthly chart of Dabur, and I'm just putting here the 10 and 20 EMA. And you see, over the last so many years, right? The last crossover happened in 2009. After that, there has been no crossover. No crossover. Even in time of COVID, no crossover. It's a fantastic stock, right? Or it has fantastic stock over the years. It has given slow and steady wealth creation stock. That's it. And now it is almost very close to a cross down over here. I'm waiting and watching for this stock, for quite a while. And I think because this is a fantastic stock, don't even need to wait for what you call that. This has not crossed down, in fact. So once it crosses down and then crosses up, that's your entry point, technically. But because such a fantastic stock, you don't even need to wait for that. Anything below 500 is such a good price to buy this stock. So these are the kind of stocks that you want to identify and add in your portfolio, and then forget about it. Don't think of selling it unless such kind of thing happens, and on a monthly there is a cross down. You don't want to sell this kind of stock. So just imagine you where was the last crossover? In 2009 we saw this. 2009 was the last crossover. At that time, Dabur was trading at what was the price here? 51 rupees. 51 rupees, and right now it is at 500, 10 times. 10 times in how many years? 12 years, 13 years, 10 times. It's a phenomenal return. The phenomenal return. That's the kind of things that you identify at this, in this kind of a market scenario. These are the kind of opportunities that you want to identify. You want to look at any other stocks, like stocks that have compounded money over the years. Bajaj Finance. Look at Bajaj Finance. It's not even, I'm not even able to see this. Okay, chart has gone haywire. So those kind of stock. But see, Bajaj Finserv, uh, okay, lost it. A good portfolio allocation between the sectors. Let's say you want. Let's say I hope you're talking about long-term investment. Okay, this is a trading session, and what you're asking is a long-term investing question, portfolio allocation. So let's say you want to build a long-term portfolio. You want to have only 10 to 12 stocks. That's all, not more than that. 10 to 12 stocks. And then which stock should qualify to enter into your portfolio? That's what you want to look at. And in those 10 to 12 stocks, let's assuming you have 100 rupees and you have 10 to 12 stocks. You don't want more than 10 to 15% in one particular sector. Okay, so you have around 5 or 6 sectors. You have 10 to 12 stocks, and those 10 to 12 stocks would be like the ones that I showed you right now, like Dabur or Bajaj Finserv, things like that, where you get in at a good price and you hold on, for 10 years or 12 years, or till the time that the monthly cross down doesn't happen. You still hold on. Why I'm saying this? Monthly cross down, any stock can go wrong at any point of time. There can be some kind of fraud or corporate governance issue or whatever. It is only at those times, when the cross down happens. Otherwise, these stocks that compound wealth over the long term are solid and stable stocks, and they give wealth over the long term. And so those 10, 12 stocks should be in your watch list. Like, these are the bluest of the blue chip stocks, and they compound wealth over time, and you want to have them in your portfolio for a long period of time. So what you want is that you don't want over concentration in any particular sector. That's the only thing. So if you have 10, 12 stocks, maximum 5 sectors, not more than that. You don't want to don't want to overexpose yourself to any one particular sector. And this is just about stocks. Then you have something, a little bit, you probably 5 or 10% allocation to gold of the overall portfolio. Not more than that. Even 10% is more. So maybe a 5 to 7% allocation to gold. And depending, if you have any kind of a short-term goals or something, which you want money within 3 years or something, then you have a certain that allocation to bonds or debt. That's the overall thumb rule of your asset allocation. And you kind of rebalance it over time. So that it kind of maintains the same ratio. That's it. There's no rocket science in that. But it's just you identify these kind of good stocks and keep them. And this right now, this kind of market is a very good opportunity to get into those kind of stocks, right? Robinhood. Can we see Robinhood here? Not enough data for the weekly chart. Oh. So it went down below and then opened with a huge gap up here. So it was like closed at 8.56 on the in the week ending 12th May, and then in the next week it opened at 10.54 with a huge gap up. I think this has to, maybe this some kind of news or something because of which this gap up has happened. But as of now, this gap up is not sustaining. So, you know, no trading opportunity here. LIC stock will behave like any other PSU stock. What to do? There is no chart analysis cannot be done here because there is little data here. But see this. This is the holding, and I think it is being held over here. So we don't know till what time this is being held. This will be held, right? We don't know that. But on the very first, in the very first day, in the very first hour, we had huge volume, 17.68 million. And so everybody who had to sell, who had to get out, has got out here. And this is kind of sustaining here at this level. But till we see a substantial little bit more data, we cannot say for sure. The only assumption that I can make is that it will behave like any other PSU stock. PSU stock is public sector unit stock. See, I'll just give you an example. This is Coal India. Okay. Now, Coal India was listed in 2010. What's the price? It opened at 291. It went up to 422. That's all. That's all. And then a little bit high over here in 2014, again to 422, 23 levels, 440, 44 levels. That's all. And then it has come down here. It's taking support here at these levels. That's all. This is the story of the PSU stock. So Coal India is a good company, right? It's a good company, and it has got a good dividend yield. But it is a PSU stock. It is a government stock, and that's why government stocks don't attract valuation in the market compared to private players. That's the problem, and so this happens. This happens, right? And even if you see like SBI is a very good bank, right? But compared to the private players, in spite of SBI being much larger and than all the private players, you see SBI does not get the valuation that the private banks are getting. That's the problem with the PSU stock. You don't get growth valuations on PSU stocks. You might get good dividends here, but you don't get growth valuation. So LIC, because 96.5% is still with the government, so it will behave just like any other PSU stock. It's a public sector unit stock. Hindustan Lever, we did have a look at Hindustan Lever. It already moved, so there is no trading opportunity. We did have a look. So yeah, see, there was a trading opportunity here below before a few weeks, but now it is already moved up to 20 SMA. I'm probably facing a little resistance here also. So stop loss is too deep, and risk reward ratio will not match up. So as of now, no trading opportunity, in spite of the fact that it is it's moving pretty well. Yeah. We did have a look at Nifty SMCG. We had a look at Nifty Pharma, and what else is remaining? Mid cap also showing inside candle here. This is Nifty Next 50, the mid cap stocks. and small cap also showing an inside candle. So overall, in the market, a reversal, but as of now, we don't know whether the reversal will sustain, and we need to see what will happen in the next week, whether the selling will resume or this reversal has the momentum to take it forward. So that's the story for this week. Cement companies. Ambuja was in the news for the takeover. So it did move before the news happened. You see, price is moving before the news is happening. You see this here. So before you get the news on the channels, price already shows that there is something happening in this place. So Ambuja Cement, Ultratech, we had a look. No opportunity here. Ultratech also we had a look. We see this indecisive candles on both ends, selling from the top, buying from the bottom. So as of now, you cannot make out an opportunity. Just holding that price. Okay. So I think we looked at some good stocks today. TCS was there. We had a look at Divi's Lab, and which was the other one? Loris. Uh, some good in the pharma sector, right? And in the auto. Fine. So unless you have any other questions, we'll call it a day. Do connect with me for any questions related to mutual fund, stocks, insurance, or portfolio, or training. Website is www.capitalworx.in. And once again, thanks for joining. You can email me here at ideas@capitalworx.in, or you can see my link tree at Capitalworx, LinkedIn also. Market, when will it go up? That's $1 million question. When will the market go up? So if you're tired of seeing your portfolio in the red, you might want to consider moving some of your stocks to the defensive stocks, like we were saying. uh, and otherwise, if you're very confident that they are good stocks and you want to hold them, then what you want to do is that wait for another 6 months at least. 6 months at least. This inflation and the rate hike. So there's possibility of a rate hike in June again. So RBI will hike the rates. That will bring another round of selling, both in the bond and in the equity market. So that is bound to happen. Inflation, we still have to get over inflation. That will take another at least 2 quarters, I think. At least 2 quarters. So by the time corporate India, kind of adjust to this whole high interest rate scenario and the inflation, and we as a people of India, we adjust to this, all of these things. It will take at least 6 months to 9 months for the for things to stabilize. So this is my view. My assessment is that till 6 to 9 months, the stock market will just keep moving up and down, like we are seeing here. It will go down, it will reverse, it will come up a little bit, selling will happen again, it will come down, and things like that. So it will not show any kind of a major movement before the next 6 months. So as of now, what you want to do is that you slowly keep allocating to good stocks, slowly, not in lump sum. Slowly keep allocating systematically to the equity market, and keep your emergency fund in short-term bonds or something like that, where it is accessible and where it is not subject to volatility. And then expect a decent amount of return from the equity market over the next 2 to 3 years. That's what you want to do for the long term. I'm saying for swing trading, the kind of opportunities that we see here are there. Even some stocks here and there, you will get those kind of opportunities. You take those opportunities and don't wait for too long. Book your profits and move out before the next round of volatility happens. That's you need to be navigating this kind of a turbulence is a little bit difficult at this point of time. You just need to be a little bit careful, so that you don't lose out on too much money. Okay, loss is happening everywhere, but you don't want to lose so much that you are busted out of the market. That's what you need to be careful about. PE chart, you can there's a screener, there's a site called screener.in. Screener.in. So check for any company here. Let's say Dabur, and you will see the PE here, 49.9 for Dabur here, right? So you can analyze any company here on screener.in. This is a good website for some, your fundamental analysis, and you can look at the balance sheet or cash flows, or some of the ratios here: the return on capital employed, return on equity, book value, stock PE, market cap, this, that, all of those things. Okay. So once again, thanks for joining, and see you soon. Have a nice day.